Hey everyone, today I want to go over my top picks for ETFs that tracks the S&P 500. Before the news of the coronavirus, the markets were at record highs, and with interest rates at record lows. I had friends that were interested in the markets, and the only way they knew how to invest into the markets was through a mutual fund. Right off the bat, I told them they should look into investing into an index fund instead. That way they can capture the overall returns of the market, while having much lower fees, and in some cases, only 1/10 of the fees you would pay compared to a mutual fund. Even though the fees may seem very small, they aren't insignificant at all. Over time, through the power of compounding interest, they make a big difference, and in the long run, you will greatly outperform the higher fee mutual fund. I would recommend this to my friends that aren't very savvy when it comes to their investments, and ones that will want to put as little effort into the investments as possible. Just like when you buy a mutual fund, you just buy it and forget it. It's really just that simple. The first question they asked me was, what is an index fund, and how do I invest into it? An index fund is a type of mutual fund whose portfolio holdings are designed to track a particular market index, such as the S&P 500. When it comes to trading, I prefer ETFs better. ETFs is an exchange-traded fund, which is an investment fund that is traded on the stock exchange, and they would hold assets, which can be stocks, so they can be designed to track a particular market index just like an index fund. Why I prefer ETFs is because of the convenience of being able to buy and sell anytime you like. And when you become more knowledgeable, you can incorporate more strategies into your investment. Now we'll move on to the second question. Which one do I buy? There are many ETFs out there that tracks many different market indexes and many different market sectors. Just looking at it can overwhelm you if you're a beginner. So today I'm going to be looking at a group of ETFs that tracks one of the most popular market indexes, which is the S&P 500, which tracks the stock performance of 500 large companies that are traded on the US Stock Exchange, which is considered to be a very good representation of the overall US stock market. So first, I'll be going over the US listed ETFs that are traded on the US Stock Exchange, and then I'll go over the Canadian listed ETFs that are traded on the Canadian Stock Exchange. They all track the same index, the S&P 500, but there are slight differences between them, and we'll go over that today. So the three US listed ETFs that I recommend that track the S&P 500 is the SPDR ETF, SPY, the BlackRock iShares ETF, IVV, and the Vanguard ETF, VOO. When looking at the ETFs, you want to keep an eye on the management expense ratio, or MER, which is the fee they charge to manage the fund. So from the first glance, it looks like we have a clear winner, VOO, because it has the lowest fees, and their performance pretty much mirror each other. So why not choose the one with the lowest fee? And this is the one I would recommend if you're looking at the US listed ETF. But I would also like to mention that SPY, is the most liquid of the three by far. If we were just buying the ETF and holding it, it wouldn't make any difference because when it comes to liquidity, they are all very liquid for us individual investors. But when we are talking about stock option, SPY has a way better liquidity and a much tighter bid and ask price. So if you do trade options, then I would recommend SPY, SPY. But that's only if you trade options. Otherwise, I would recommend VOO. For the Canadian listed ETF that track the S&P 500, there are quite a few more options to choose from. But at first, I would like to split them up into two categories. Ones that are currency hedged and ones that aren't. Since we are investing into American companies that are traded in US dollars, the difference in currency exchange will affect the value of our investment. So for example, if we purchase an ETF that isn't hedged, if the US dollar strengthens against the Canadian dollar, our investment will be worth more in Canadian dollars as our Canadian dollar is now worth less, and vice versa. If the US dollar weakens against the Canadian dollar, our investment will be worth less in Canadian dollars because each Canadian dollar is worth more now. It all depends on whether you want to take that risk or not, because it's hard to come to a conclusion whether one is better than the other. Now that we split them up, you have to come to a conclusion whether you want a hedge ETF or an unhedged ETF. And from there, you will notice there's only particular 4 to choose from. And if we were to find the one with the lowest management fee, Vanguard wins. If you're looking for the unhedged one, then pick VFV, otherwise choose VSP for the hedged one. But one thing I would like you to notice is the difference in management fee between the US listed ETFs and the Canadian listed ETFs, as the fees for the Canadian ETFs are well over 2 times, almost 3 times the fees of the US listed ETFs. So if you're able to exchange from Canadian dollars to US dollars with a low exchange fee, it will be better for you to buy the US listed ETF VOO from Vanguard in the long run. One last thing I would also like to note is that just because you're buying Canadian listed ETF, you will still have to pay the withholding tax on your dividend payments because the Canadian listed ETF holds American companies. The withholding tax is pretty much what the name implies, it's a tax, and any dividends earned from the US companies by foreign investors will have to pay a 30% withholding tax, but for Canadians that is reduced to 15% because of the tax treaty between the US and Canada. There's only one way that I know of that you can get around this and not have to pay the withholding tax, and that is by purchasing US listed securities in your RRSP account. So when you're purchasing US listed securities, you should try and plan it out in advance. For example, me personally, I try to purchase my US dividend paying stocks in my RRSP and my Canadian dividend paying stocks in my tax-free savings account, my TFSA. And if you think about it, the withholding tax will be much greater than your management fee. VOO currently has a yield of 1.88%, so the withholding tax will be about 0.28%, which is almost 10 times greater than the management fee of 0.03% that Vanguard charges you. So to sum it up one more time, if you have US dollars, or if you can obtain US dollars without paying any significant exchange fees, the Vanguard ETF VOO is your best choice. If you're Canadian and you aren't able to obtain US dollars without paying high exchange fees, then I would recommend the Canadian Vanguard ETF VFV if you want the unhedged currency one, and VSP if you want the hedged one. If you have any questions, let me know down in the comment section below. But as always, if you enjoyed the video, please like and share the video. It really helps out the channel. And you haven't subscribed yet, please make sure to smash the subscribe button. And thank you for watching. I'll see you in the next video.